shouldn't be trading right now.
Frank, you're trading? We're on the beach. How are you even trading? Is that your laptop?
No, it's my phone.
Oh.
We got the mobile version now, remember that?
Oh, that's right. It's Finder
Yeah,
Mobile.
yeah.
Frank, how many times has that boat gone by?
What boat?
Frank, it's right in front of us, right out in the water.
I don't see it.
Frank, it's passed us like 4 times by now.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right. Good morning, guys. Welcome back to another live stream. Hope you're doing well. And happy Tuesday to you. I'm sorry. Is today Tuesday? Yeah, today's Tuesday. Happy Tuesday, everybody. Welcome back. And good morning. Good afternoon, wherever you are in the world. We are live here currently on YouTube as well as on Twitter. The dollar index is slightly higher today. The VIX is, moving. You've got gold higher today. The stock market completely flat on the day, though kind of recouping some losses that happened in the Asian session. So, well, actually, let's see. When was this? We had a downturn in the NASDAQ yesterday, and then overnight there was a little drift lower. And here in the pre-market for the US Open, a little bit of buying for the NASDAQ. So let's talk about what's on the radar here today. Kind of a light news day, at least today, but we still have plenty of stuff coming out the rest of this week. Tomorrow we have the PMI numbers, which are going to be really interesting. Flash manufacturing and flash services PMI out of the US, and then also PMIs out of Europe and the UK. So it should be interesting. Also, I'm just going to check the A1 Trading live stream schedule today. You guys can always do this yourself. Head over to a1trading.com. Tons of free courses, free tools, by the way. Live stream schedule. And we can pull this up and we can see what the schedule is looking like today. So we've got shows planned out by Chandler and James for the rest of this week. And we could see that we've got Diego coming on at 9:45, take over the show. And then we've got Chris at 10:15. And then Nick Phillips at 11. We got me. You're stuck with me for a little bit. Then we get the rest of our guests coming on. And that is what makes the A1 Trading Show pretty cool. We have different guests from all over the world coming on. So I believe Nick is from North Carolina, Diego's from South Africa, and Chris is out there in Utah. So get a little bit of everybody today. Anyways, today, let's take a look at what else is moving. The dollar index, I want to talk a little bit about this on the 4-hour chart. So the dollar index, at least in the last few days, has been catching a little bit of a rebound move, a little bit of a push higher. And I think that if you're a bull on the dollar index, you're looking at something like this. You're saying, okay, you have a lower high, then a lower low. But then now the question here, is this a higher low for dollar bulls? So the question is this a higher low? And a lot of people, I would say, from a technical perspective, would say, oh, yeah, that's a higher low. We're going higher. And we might go higher. But I wouldn't really call it a inverse head and shoulders unless you get some sort of break of this lower high concept, right? Because what we could be seeing for the dollar index is just range bound, right? You could see something like this. So I wouldn't rule out the idea that just because you've gotten a bounce does not mean that this is going to be a full-blown, upward trend from here on out on the dollar index. Could it happen? It's possible. Anything is possible in the markets. But I would say that as you hit resistance here, and even more so here around the 105 level, you could see sellers come back into this market to continue the rate cut story this year, which I think is still the prevailing theme of markets in 2024. Rate cuts probably happening at the end of the third quarter as well as the fourth quarter could weaken the dollar. When we get back to monetary policy, we talk about where the Fed is going overall, the path does seem pretty clear. You've got more data coming down the pipeline, but we've talked about this a lot. Jobs data out of the US. Let's have a look at NFP. You can see that jobs growth has been not weak, but cooler than it was. You were seeing some much higher numbers early 2023. We've seen numbers kind of cool on that front. The private sector, let's take a look at ADP. You can see cooled recently in recent monthly reports there. If you take a look at unemployment claims and we scroll out a little bit of time here, let's go like 180 days. Hold on. 180. So you can see unemployment claims have been just slowly, gradually rising. And remember, people filing for unemployment, this is not, we're not in crisis mode by any means where unemployment is, but it's growing. And it is worth mentioning that when unemployment is growing, historically, it usually keeps trending the direction that it's trending. So recently we have seen unemployment rising, but you have to also be fair, because a lot of people will say like, haha, the economy is looking bad, but it's not looking bad. It's just coming off of its all-time lows in unemployment. So when you take a look at unemployment, you go back a couple years, take a look at the last 5 years or so. If it loads, sometimes Edge Finder freezes up when I'm streaming. If you take a look at the last, 5 years on this stuff, I'm going to refresh this page, see if it works for us. Unemployment jumped up big time during the outbreak of COVID-19. Let's try just 3 years, see if 3 years works. And then it started trending back down. And we've seen, really low unemployment. And then we've started to see unemployment kind of rising again. Again, you have to say, well, are we at a bad spot right now? No, people are very, very historically employed right now. I know it may not feel like that because people are still struggling out there with higher prices at the grocery store. Don't get me wrong. I'm not saying this is a perfect economy by any means, but I think it is pretty fair to say that people are pretty employed right now, but we're seeing a shift in that. And that shift could turn into a bigger shift, right? You could see if the Fed does not start to cut interest rates soon, you could start to see unemployment accelerate higher. And that's what the Fed and what the market does not want to see. So as we've seen these data points rolling in, slowly creeping higher, that is where Fed expectations for a rate cut are seemingly becoming more likely. So you have unemployment rising, and the final piece of the puzzle is inflation. Is inflation coming down? That is the question. What we can see is inflation has come down. It's gone sideways for some time, but in recent months, we've had some good progress in inflation. So it would seem to me that the Fed is doing a pretty good job overall at working their way back to the mandate. I don't want to be rude, but I think you're long in the NASDAQ is too early. We got one more leg down. Sebastian, I don't take that as rude at all. If you have a differing opinion than me, then do your thing. To be completely fair, though, like if you have a reason to be short or you're bearish or you're not bullish, like I'm not going to tell you that you're right or wrong. I'm sticking to a strategy that I've got. So I like the NASDAQ on the long side. I have my risk managed if I'm wrong. You might be right. You might be wrong. The market might bottom out here and rip higher. As long as we're all on the same page that nobody knows perfectly well what's going to happen in the markets and we're all managing risk appropriately, we can agree to disagree on certain things. Also, I actually would love if the market goes lower. I don't think it will, to be completely honest. I could be wrong about that, and that's why I've got a stop loss. I don't think it will go lower. I think this level could hold. And if it does, then excellent, we'll make some money. If it doesn't, to be completely fair to you, honestly, I'd like that better because I like these levels even more for building a bigger position or getting long. So I do have a stop loss in this trade, but if we break and we go lower, I actually like this level better because then I feel like I'm getting a little bit better pricing on the NASDAQ, the S&P, the Dow, etc. So I hope you're right, but I do think that this support has a good chance of holding. We're in a very strong bullish market. Sentiment is very bullish, and that can stay irrational for a lot longer than people think. I've been in this market for a long time. What I've found is that, when everybody thinks something's going to go bearish, oftentimes that's a really good buying opportunity. Personally, it looks like a nice entry, Nick. Looks like it touched a fresh area of demand, and we're bouncing off. We'll see. Again, the thing is, what I want to encourage everybody who's listening, I don't know with certainty. I'm not being stupid with my risk. I'm not gonna cross my arms and say, no, it can't go lower. But I'm also gonna say that I'm not, 100% sure of anything. You never should be. In my opinion, with markets, you never should be 100% confident. It's a great way to lose all your money. Never be 100% confident. The old expression that I've heard many times, and I thought it's stuck with me, is this concept of hold loosely to strong opinions, right? I think the market heads higher. That is a strong opinion, but I'm holding loosely to it. And I'll admit if I'm wrong. You're not going to see me be like, well, no, it's a bad trade and I'm just not going to get stopped at. No, I'm just going to stop out. Like if I'm wrong and move on, set up the next trade, right? Where traders go very, very wrong is they bring their ego and stubbornness with them to the markets. And they say, oh, well, if it goes down, it's a fake out and I'm going to move my stop loss and I'm not going to, and then this happens to them and it will happen. I will be dead wrong at some point or another. Maybe it's this trade, maybe it's not. But when I'm dead wrong, I'm not going to go down with the ship, right? Don't put your pride before your risk management. So yeah, we'll see. To me, the NASDAQ at this level looks good. We'll see if it holds. If it doesn't, I'm going to stop out. And that's as simple as it is. In fact, if it pulls back, we'd probably also see the Dow Jones come down. I would actually really like this 40,000 level as another possible setup. This is on the Edge Finder as well. So yeah, very interesting. If Donald Trump becomes president, then all of his inflationary policies, all that hard work will be undone. Lee, I hear what you're saying. The tariffs are certainly an inflation concern, but I don't, it's hard. I'm not here to make a prediction on all that stuff because could it be inflationary? Yes, but we also could be massively increasing under a Donald Trump presidency our own natural resource extraction, which could keep oil prices down, which could help inflation. So there's combating thoughts. I'm not 100% sure either way is whether or not if Donald Trump takes presidency, if it's going to lead to a lot of inflation. I do kind of lean thinking that the tariffs will be inflationary. So I agree with you on that. But you may also see huge growth if business taxes cuts happen and looks good. Again, I'm not really speculating on that. But generally speaking, whether the economy gets spurred or not, I think it's good for stocks because those tax cuts for big businesses means more buybacks of their own shares, and it means more investment into technologies for themselves. So I'm kind of bullish on stocks in that regard. That being said, the political uncertainty risk, at least right now in recent days, has been kind of pulled out of the market. Whether it was, I'm not saying that it's because it's Trump. I'm saying if you have uncertainty about who's going to be the president, the market doesn't like that. It doesn't matter who the president's going to be. The market does not like not knowing who the president's going to be. So with an increased probability in Trump winning the election in recent weeks, the market kind of likes that. Okay, well, fine, we're dealing with Trump now. That's what we're going to work with. If they have that more of a known, I'm not saying it's a certainty, but that increased probability of knowing who the president's going to be, whether it's a Democrat or Republican, the market likes that risk or that uncertainty being taken out of the picture. Does that make sense? It's not because it's Trump necessarily, or because it, could have been Biden or Harris or whatever. Even if the election odds swung so far the other way, like to the Democrats, I think the market would like that. The market, I'm not saying because it's Democrats or because it's Republicans, I'm saying the market doesn't like not knowing. They just want to know, okay, this president's going to do, and then we're going to go back to what really matters, which is Jerome Powell and his operations at the Federal Reserve, right? Because fiscal policy is really hard to predict whether or not Trump would be super inflationary or if he could cause super amounts of growth. It's speculating. Whereas when we can look at the Fed, we can get a much more accurate view of what is likely happening on that front. Does that make sense? I hope that's helpful to you. I have to navigate these topics carefully, as you guys know, because politics are just such a nasty subject, but they do impact the markets a lot. So I kind of have to give you at least the best analysis that I can on it. Hey, Nick, may I honestly ask, do you think it could actually be kind of useful to study ICT or SMC for lower time frame trading to some extent or not? I've not really dedicated any amount of time. I can't tell you if it's worth studying or not. What I can tell you is you should never study anybody or anybody's concepts or work if they have not showed you a third-party, long-dated track record. Point blank, period. There are many traders in the smart money concepts world. I don't know any of them personally that have showed long-term track records. And my opinion on anybody learning any strategy or system, don't learn strategies or systems or watch anybody's content that does not show you long-dated, regulated broker statements or, logs into their trading account regularly. Okay. It really, really don't mess around with that stuff, because you're going to waste a lot of time watching people that don't. I'm telling you, anybody who has a smooth talking, way about them could start talking about trading and deceive people into thinking that they're super profitable. I am absolutely not accusing any particular person on YouTube of being that. I'm just saying that those people certainly exist. And the ones that you should listen to are people that show you their performance. Like, if you're asking me, should I go spend thousands of hours learning concepts? It seems foolish up front to say, I'm going to go do that without seeing whether or not that person actually has the results that I want, right? Show me the results, point blank. Like, am I going to watch your content for hours and hours and hours? Show me results first. That's the only way. Otherwise, I'm not going to do it. So that's my take on it. And I have a hard, opinion on that stuff, because I genuinely sympathize for people who have invested so much time buying courses, learning from people, but those people have never shown them that they're actually profitable. Like, imagine how much time has been wasted from people who, have dived deep into learning a strategy or a system and have no idea if it actually works or not. Nobody's proven to them, yes, it is working. So when I show you guys my content, I'm not here telling you that I'm the world's greatest trader, or that I make, millions every month, or that this stuff is easy, right? I'm not here to tell you any of that stuff, but I do show you my logged in broker all the time. I find that to be very, very important to do. In fact, I'll do it right now because I do it regularly. And I think it's important that influencers that you spend time watching do that. So 1 second, I'll log in. I want to oust my my password here. So I'll show you guys what interesting, exploring other accounts options. Currently all set. Oh yeah, that's cool. Webull did launch their futures brokerage side of things, which is really cool. Okay, so here are my current positions. I am long the NASDAQ, the technology sector through XLK, TLT, gold, the cybersecurity ETF CIBR, and XLC, which is comm services. Think like Netflix, Meta, Google. So I do that to show you that, if you spend time watching my videos, my live streams, I do what I say I do. I'm not messing around. I'm not wasting your time. That being said, if you want to know the system that I use, the system is wrapped up in this product called the Edge Finder. Again, I show you logged in broker stuff so that I can also stand on 2 feet when I sell you guys stuff. What I'm showing you here is our product, the Edge Finder Pro. It helps traders analyze market data in a more comprehensive way. You can pull up, jobs data like the NFP reports, or you can pull up sentiment like institutional money flow, like what are they buying, what are they selling through the commitment of traders data. So my team and I were a software company out of Atlanta, Georgia. This is what I use predominantly to help me find the trades that I trade. Currently, we have things like the DAX setting up, the Dow Jones. We have gold, the Russell. Actually, the Russell's back to neutral. On the bearish side, you've got a couple CAD pairs. So we trade everything from FX to commodities, indices, et cetera, et cetera. So if you guys would like to try this out, we'll drop a link here in the chat to get 30 days access to the Edge Finder. You can apply for a 30-day trial and get some information about that and go through that. Rafi says, what is your recommendation for studying technical analysis, as there are a lot of courses available? Chandler or James, can you guys try something? I'm not sure if we have it in this live stream, but there should be a free course link in the description of this video, or at least in our Trello board, our team Trello board for free course. That's a new one that we've launched recently. If you guys could drop that link, that would be awesome for anybody who would like our free courses. We do genuinely offer 100% no nonsense free courses. We don't sell courses. We don't have courses for sale. Our educational material is pretty much all free. The only things that we sell are software and our membership group. So there you go, guys. If you would like to get a free course from us, we do a fundamental and technical analysis course. Spent a lot of money building those courses, but they are free to you guys. All we need in exchange, we're not saints. We will get your email. And if you would like to be, you can be added to our email newsletter. And we will share analysis ideas with you and maybe periodical promotional events that we're doing, if that is something you're interested in. So we try and stay 100% transparent with what we do. Yeah. Okay, guys. The next chart I wanted to pull up here is gold, just for a second. Talk a little bit about gold. So I am long gold, as I mentioned. Higher lows are the question here today. Are we going to see this thing hold support around this 2,400 level that we tagged the last few days? I like gold to the upside. On a fundamental perspective, I like it a lot because with all of this political uncertainty, the elections and the what's going to happen on the Eastern European theater, right? Following the end of the election, whether it is Trump taking office or likely for the Democratic nominee, I believe it is expected to be Harris. If Kamala Harris wins the election, or if Trump wins the election, that uncertainty, I think, has the potential. This has been a theme for me all year long. We've talked about gold being kind of a thematic hedge to a little bit of all this political uncertainty, as well as war uncertainty. Unfortunately, we live in a time where wars have come back into the, I think, like pre the Ukrainian situation, we were at like an all-time low for like global violence on average, which was awesome. And unfortunately, nobody likes wars, but the question will be what's going to happen next in those, conflict heavy theaters. The other one is Taiwan and China. And, if you're somebody who is concerned about that situation, a lot of people are concerned about if Trump takes an aggressive stance on China again, what's that going to look like? So there is uncertainty. And I don't claim to know what's going to happen in those scenarios, but I do think that a fair hedge is to stay long gold for me. So I will probably, for the remainder of this year, as long as I can find technical setups, remain on the bullish side of gold as long as rate cuts are expected and we have uncertainty on the geopolitical front. I like gold longs. I've made good money this year on the gold long side. I have not been completely right in my timings on this. I took several losses during this time and made good money during these recent trend times. But generally speaking, this year, I've made a lot more money than I've lost on gold. And that is all that's what trading's all about, right? Winning more than you lose overall. So we'll see. But I have a stop loss on this trade. If gold turns around, I will stop out and look for other entries. If I do take that trade, it'll be shared inside of our Discord channel. If you guys would like to join Discord for free, we do have a free version of our Discord. The trade signals are not free, but the general analysis that we do in Discord and Telegram is available for free. If you'd like to join that, we'll drop the link to both here in the chat. Join the Discord, or you can join Telegram if you prefer Telegram as well. Both of those will be in the description of this live stream and or the live chat if you're with us here live. So guys, we've got our first guest here, Diego, coming on the show in just a moment. So what we're going to do really quick is we're going to take just a short break to thank one of our sponsors here that makes this show possible. And then we'll be right back with Diego, who's going to share some charts with us this morning. So stay tuned. We'll be right back. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show. All right, and we are back with Diego. How's it going, man? Welcome back to the show.
Good day, Nick. I'm good, thanks. And self?
I'm doing well. It's good to have you back on the show. And again, we've enjoyed having you on a couple different times now. So welcome back. And how are things going with you?
Thank you. Yeah, like on my side, when it comes down to trading, from Friday, right? I can kick myself, Nick. Honestly, I can kick myself. I was basically looking for some beautiful longs when it comes down to this beautiful pick called the NASDAQ, right? And you know what? I basically found myself. Can I share my chart? If
Sure.
I can maybe just. So I basically found myself. I don't know if this happened with you guys, like ever. Share screen. Just like that. So this was like the trade which I found myself taking over the course of today.
Mm-hmm.
However, let me show you this. Let me just remove everything right there. So as I had mentioned, like previously, when I basically joined the show, right, I said that with equal lows and equal highs, there's liquidity resting above and below these areas, right? Now, I basically was like, you know what? I think that I am going to find myself, swinging the NASDAQ towards the upside, right? Simply because we are taking out some liquidity at these areas right over there. And from my actual 15-minute, right, my trade was basically looking something like this. I found myself going long. Where was that? It was around about here. If I can maybe just share, I actually did take a screenshot of the trade. I'm not sure. Can you see the image of the picture on my screen or not?
No, I can't. I think you've shared the specific browser, but if you share your whole screen, we'd be able to see it.
Okay, let me try and do that. Well, okay, I can't find myself doing that. So I basically found myself entering price at 19,558, right? So if I can maybe just find myself doing this, uh, just so that we can 19,558, not there. Right, I do know that it was somewhere here. Right, so I basically found myself going long with price, and with the tap, or basically with us basically taking out our liquidity, right? I found myself going short, and I was like, you know what? I'm gonna find myself swinging this trade because ultimately I wanted to see price right over there. I had a 300 pip. Take profit area.
Hmm.
And wow, right, for the majority of the time I was in a loss. Right, and price basically fluctuated, so we closed in a loss on Friday as well. Right, and I was like, you know what, since I'm seeing my actual swaps whatsoever, I was like, you know what, Nasdaq found itself creating a gap right over here. This was now on Monday. Right, so on Monday I woke up, price was run about this area right over there. I was
Hmm.
like, you know what, price created this gap. We need to fill up this gap right over there. And with the ideology of, okay, I'm gonna cut my actual trade right over there. You know what, cut off the actual swaps as well. So if I'm finding myself having that actual shift to the downside, I will just re-enter price. And yeah, I haven't re-entered price till this day. And look at that. We had like a huge shift towards the upside. So
Yeah.
yeah, that right there was trade. But yeah, unfortunately I didn't find myself taking advantage
Well,
of
that's
that trade right over
Diego.
there.
The thing is that's cool about that is at least you can, kind of acknowledge a time when things didn't go well. I think what is so crazy about the trading community is most people can't, or most influencers or traders in the space, they won't ever talk about when things don't go right for them. So, just while we're on the theme of Nasdaq, I tried to go long
Mhm.
here, and this ended up being a point where I went long, put a stop here, and immediately got smacked out of my trade. So
Yes,
it
yes.
happens. It's just part of the process. Sometimes you miss trades. Sometimes you stop out on a trade. So totally, appreciate at least just sharing your missed opportunity or trade that didn't go well or didn't happen. It happens to everybody, and I think what's powerful is when traders who share content can actually talk about feeling a FOMO moment, or I think that a lot of people in the audience really resonate with that. So thanks for sharing that. Also, Diego, if you'd like to kind of take over the show for a little bit, we'll give you a chance to just walk through some more charts or more setups, current analysis, whatever you'd like to do, and then just give you the floor for a little bit as you take over for a little bit. I just want to mention, if anybody enjoys your session here, guys, make sure to go subscribe to Diego on his own YouTube channel. And Diego, you've got the show for a few minutes, okay?
All right, let's
All right,
go.
man.
Thank you, Nick. Thank you, Nick. See you in a minute. Um, all right. Well, let me just find myself doing the following, just like that. All right, let me just do that so that I can just look at the chat like over here as well as the charts. Share screen, share the Nasdaq. Boom. All right. Fam, how are you? To the chat, how are you? Are you all well? What is your thoughts on Nasdaq? Are you long on the Nasdaq? Are you short on the Nasdaq? What is your thoughts when it comes down to this beautiful pair called the Nasdaq? Are you long or are you short? Let me know. Live Forex trading video is saying buy now, buy now. Nah, no. Well, all right, if you're gonna find yourself doing that, by all means, right? So let me start off from my DXY, right? Now, how I'm basically looking at my charts from the DXY, that is basically an inverse of what's happening on the Nasdaq, right? So if I'm basically seeing that overall volume is towards the upside, right? I am expecting the Nasdaq to at least have some sort of a pushback towards the downside, right? Now, obviously, I'm not going to go in ignorantly inside the charts, being like, you know what, we are going up on the DXY, we need to solve, you know what, the Nasdaq whatsoever. No, right? But I'm looking at overall market structure and how we can basically participate in that, right? And if we can find ourselves looking at our DXY, right? Maybe if I can start from a weekly time frame, we can basically see that price did find itself having a beautiful shift back towards the downside. And I'm always finding myself looking at liquidity, right? And we can basically see that liquidity has been taken at this area, and we can see that we are having some sort of an actual bullish momentum back towards the upside, right? So I'm looking at this leg, which we have found ourselves forming over here, as the area to where I will get my Fibonacci out, right, from my high to my low, just like that. And ultimately, all I'm finding myself doing is just simply wanting to see price move from a discounted area to a premium area, from a premium area to a discounted area, right? So with that being said, I would actually like to see us have some sort of an actual push towards the upside on the DXY, at least back into this premium area we have found ourselves creating, right? As well as, you know what, we can see that we do have some sort of an actual fair value gap, which is lining up within this premium area as well, right? So that area right there is a point of interest to where I would like to see the Nasdaq basically, well, the DXY to find itself having some sort of a pushback towards the upside into, right? And with that being said, you know what, on the Nasdaq, I would like to see some sort of an actual pullback towards the downside, right? And looking at current PA, looking at current price action, which we find ourselves doing, right? Just like I might mention earlier, when it comes down to equal lows and equal highs, I want to find myself identifying those areas, because it's simply easy to just, you know what, identify it with the eye, right? And here we can see that we had some beautiful equal lows, which we have found ourselves creating, right? And we can see that we did find ourselves taking out those lows right over there. And currently we can see that we are having some sort of an actual, you know what, shift towards the upside, right? And with looking at PA, if I can just find myself zooming in price just a little bit, right, the moment we have found ourselves having a closure above this up close candle, which we have found ourselves forming right over there, right over there, I'm looking at this as, you know what, we have changed market structure on the DXY from this beautiful bearish market back into an actual bullish market, right? So that we can find ourselves having some sort of an actual further continuation move back towards the upside, right? Now, obviously, if you would find yourself looking at the daily time frame right over here, right, an area which you can also just simply find yourself boxing out will be this beautiful area of, you know what, resistance we have found ourselves creating right over there. You know what, just looking at it as a point of interest where price can potentially hit back into as well, right? And obviously, if you see price have some sort of a rejection from this area onwards, you know, you can find yourself participating with price, you know what, having that actual shift back towards the downside. But as if now I am still somewhat bullish when it comes down to the DXY. And if we can find ourselves having that closure above this down close candle right over here over the course of today, right, I'm expecting the Nasdaq, well, the DXY, to have some sort of a pushback towards the downside and then have an actual further continuation move back towards the upside, right? Are you all with me on that one right there? So currently on the DXY, you know what, I'm looking for some upside momentum. You all with me on that one? You all have an understanding of what I basically just made mention before we're going to find ourselves tapping over to the Nasdaq. Before we head over to the Nasdaq, you all with me? All right. So let us look at the Nasdaq, right? Let us look at the Nasdaq. So looking at the Nasdaq, right? We all good. Perfect. Right. So looking at the Nasdaq, right? Also starting off from our weekly time frame, right? I'm always finding myself looking at, some order blocks, etc., right? And this right here is an actual order block, which we have found ourselves creating this down close candle right over here. Right. So if price is simply going to find itself having a closure still within this area over the course of this week, right, there's a high possibility that we are finding ourselves or can find ourselves having that actual shift towards the upside when it comes down to the NASDAQ. However, over the course of this week, right, we did find ourselves, well, last week, we did find ourselves having this huge shift towards the downside, right? Basically showing us that our base is trying to step within the market. Okay, so at this current moment, I am looking at this over here as, we are finding ourselves creating some sort of a wick for a further potential continuation move back towards the downside. Okay, for a further continuation move back towards the downside. Now, on the weekly time frame, looking at another actual order block will be this area right over here, right over there, right? Now, able for me to guys have an actual shift all the way back down on the NASDAQ back into this area over here. I mean, this is literally 900 odd pips towards the downside, right? So if I want to see price have that shift back to the downside, I need to see the NASDAQ have at least a closure below this actual order block, which we have found ourselves creating right over there. You clear? Right? But as if now, if we are not going to have that actual closure below, I'm still somewhat bullish on this beautiful pair called the NASDAQ, right? And just by looking at the weekly time frame, I'm having my eye out on this area right over here as a potential point of interest to where we can potentially head back into, as this is serving as somewhat of an actual, an inversion fair value gap, which price have found itself creating. All right. So scaling to the daily time frame, right? What we can basically see on the daily time frame is that we are overly extended towards the downside as well, right? We do know that price is not just simply finding itself just having like one like exponential move to the upside or an exponential move to the downside, right? We are finding ourselves moving with some beautiful impulses, correction, impulse correction, impulse correction, impulse correction. Right. So looking at the NASDAQ at this current on the day time, we can basically see that we had this beautiful shift back to the downside, had a correction. Now we find ourselves basically having that actual impulse. And now I am basically looking at this area as, the correction which price is finding itself creating, right, for a potential shift back to the downside. Okay, and a point of interest will basically be this inversion fair value gap right over there as well, for us to basically have that potential shift back towards the downside, right? However, over the course of today, I was actually looking for some beautiful shorts back towards the downside, right? And simply because of the following reason, right? Simply because of the following reason. Now, fam, listen, I don't know if you also experience this at times, right? But sometimes I tend to find myself becoming so, fixated on one thing, right? And I am fixated on price basically creating this beautiful gap below, right? And we haven't found ourselves closing that gap right over there. So that right there is bothering me, right? That right there is finding itself bothering me. Now, are we bearish in structure to basically see price have that closure back towards the downside? No, we aren't just off yet, right? So if I can basically see the NASDAQ have an actual closure below these down close candles right over there, right, there is a high possibility for us then having that beautiful shift back towards the downside, right? And ultimately that is something that I would like to see happen over the course of this week. However, if we're not going to find ourselves opening that up, then it is what it is. We just have to find ourselves, being reactive with what price is presenting, right? But currently we can see that we are in overall bullish in structure as well, with us basically taking out that low right over there, as well as us basically taking out this high right over there, right, we can basically see that we have changed market structure on the 4-hourly time frame from this bear market back into a bull market, with us basically creating a beautiful higher high, right? So with us basically creating that higher high, you know what, we are bullish in structure. And me, Diego, I am simply an actual price action trader, right? So all I find myself doing is basically just taking advantage of what market structure is presenting to me. All right, let me just do that quickly. Let me just, my apologies, fam, my apologies. Right, let me just do this quickly. Perfect. Right, perfect. So yeah, you know, over the course of this week, I would actually like to see us have that actual shift to the downside and have some sort of a closure below. But you know what, we have to wait and see till price, you know what, price need to find itself doing just that, right? But as if now, you know what, we are bullish in structure, and we can see above price, you know what, we do have some relatively equal highs which price have found itself creating as well, meaning that we do have some liquidity resting above this area as well, right? So there's a high possibility for us basically having that overall shift back towards the upside, back into that actual weekly inversion fair value gap, which we just found ourselves pointing out over the course of, you know, a few minutes ago, right? Which we basically pointed out, which is reflecting on the weekly time frame. All right. And yeah, you know, I actually am prepping myself for some beautiful shorts on this beautiful pair called the NASDAQ, right? And if I can just simply find myself sharing today's trade with you all as well, right? And this is simply how I am, you know, participating with price on an actual day-to-day basis, right? So over the course of today, right, over the course of today, maybe if I can just go on an actual lower time frame, right, I basically found myself participating in some shorts, right, in some clean, nice little shorts, right? And all I'm basically doing is just following market structure once again, right? So if we're going to look at this previous leg we have found ourselves creating right over there, right, we can see that we had some beautiful impulses, correction, impulse, correction, impulse, correction, impulse, right? There we have found ourselves having some sort of an actual change in market structure, right? And the moment price basically had a closure below that wick, check this out. If I can maybe just be a little extra and zoom it in for you guys. The moment we have found ourselves having a closure below this actual wick right over there, right, we basically changed market structure to bearish. So we can see that we then had that beautiful impulse, well, correction, and then an impulsive move back towards the downside, right? Basically just saying that we are bearish in market structure, right? We are bearish in market structure. So me, Diego, what I find myself doing is simply just, you know, unboxing out these areas like that, my previous corrections, as my previous corrections are areas which I'm looking at as some sort of an actual breaker, right? So I'm expecting price to have an opposite direction, right, when we find ourselves reaching in that area, right? So basically, if we have that correction, I'm expecting the impulse to find itself happening from this area onwards, right? And all I do is simply just head over to my 1 minute time frame, right, and just simply, you know what, execute price right over here as well. Same analogy, right? Same thing. All I'm waiting for is a change in market structure. So there we can see we had an impulse, correction, impulse, right? And there we had the change in market structure, right? And price basically found itself doing the following, right? Once again, to demonstrate what I just made mention, check this out. The previous correction, which we have found ourselves creating right over there, was basically serving as my breaker, right? So all I'm waiting for is for price to have a shift towards the upside and then have an actual continuation move back towards the downside from there, right? So trade basically find itself looking something like this. Now, the rule when it comes down to an actual breaker is simply to have your stops right at this region right over there. But me, Diego, you know what? If I'm having a risk of less than 20 pips, I at least find myself just adjusting my trade to at least 20 pips, right? if I have a risk that is lower than 20 pips, I at least adjust my trade to 20 pips. All right. So all I am finding myself doing is literally just wait for the retest for a potential continuation move back towards the downside, right? And when price is at my 50%, you know what? This is when I find myself just closing some of my trades and just place my actual trade at break even, right? So right there, that is basically the retest which you are finding yourself waiting for. Right over there, you know what? I simply find myself taking some portion off the table, place my trade at break even, right? And yeah, you know, further onwards from there, basically got stopped out of this trade right over there, and we find ourselves having a shift back towards the upside right over there. So that was me over the course of today. All right. Any questions from you? Any questions? Any questions whatsoever? Okay, so you are scalping? Yes, yes, yes. I am a scalper. I am a scalper. You're looking at any Forex space. I don't look at any Forex space, right? But we can look at some if you want me to find myself doing that. I only find myself looking at the DXY as well as the NASDAQ, the only two pairs. Take a look at the Euro USD. Okay. The Euro USD, I think it's over here. Wow, nice shift back. Nice shift. Let's look at the daily time frame. Right. So Euro USD, what's happening? What's happening? Right. So Euro USD daily time frame, we can see that we are having that actual pullback. I believe that last week we were somewhere over here, right? And we basically indicated that price is high. We need to come back for some sort of a pullback, right? And we need that pullback, and we can see that pullback, right? Now, as we can see, we had this impulsive move towards the upside, right? So with us basically having this impulse, I'll just simply find myself looking at this candle right over there, that down close candle, which is serving as my actual order block, right? So from this area onwards, I would like to see the price have a beautiful, beautiful shift back towards the downside, back into that area over there, right? Ultimately, on if I can maybe just go back on the daily time frame, we are still bullish in structure, right? Keep that in mind. We are still bullish in structure. Okay, so scaling down to my H4 time frame and just keeping that area right over there, looking at price above, what's happening over here? What is happening over here? So here we can simply see that, you know what, we are somewhat bearish in structure, right? We had some beautiful, beautiful lows, which found itself coming through right over there. And we can see that, you know what, we find ourselves taking them out. So over here, I will find myself just be boxing out these areas right there, right? Because that right there will be serving as an area of supply to where price can potentially find itself having some sort of an actual shift back up and have some sort of an actual, you know what, potential continuation move back towards the downside, right? And I do know when it comes down to Forex space, right? Forex space is basically something to where you would like to find yourself looking for some beautiful, beautiful swing opportunities, right? So yeah, you know, if you want to find yourself being a little bit more conservative, myself boxing out that right there, this area just like that, and let me just scale to my 1 hourly, see what's happening over here. Clean stuff, right? So a pullback back into the actual breaker, right? A deeper retracement will obviously be back into that actual area of supply. So you have to find yourself accommodating your stop loss accordingly, right? But in overall, I would actually like to see the Euro USD have some sort of an actual shift towards the downside, back into this area, wait for some sort of a change in market structure to be finding yourself looking for some potential long opportunities. All right. What? Page you're looking at, Euro D is at a it's gone down to 2 minutes. All right, you can also look at GBP USD. All right, let's see GBP USD. Do I have GBP USD? I don't, right? Forex page GBP USD. Let's see what's happening over here. If I can just go on the daily. All right. So GBP USD, right? We can see that an area of liquidity once again has been taken, right? Area of liquidity has been taken, and we can see that we are having some sort of an actual shift back to the downside, right? Can see that we have some sort of a shift back to the downside. So once again, the exact same thing, right? Can you see with this impulsive move, which we find ourselves creating over there, right? All we are doing now is basically just monitoring price and see where can that potential, pullback be back into, right? Where can that potential correction be back into, right? And the area that caught my eye, or the candle which is catching my eye, will basically be, once again, this down close candle, which we have found ourselves creating right over there, right on the daily time frame. All right, so scaling to the H4 time frame, let's see what's happening over here. Let's see what's happening on the H4. On the H4 time frame, kind of looks interesting, right? Because currently we are finding ourselves tapping within an area of, resistance, right? But if price is simply going to find itself having some sort of a closure above this area over here, right? These up close candles right over here. I can box it out for you guys just like that, right? If price is simply going to find itself having a closure above those actual up close candles right over there, right? Expect the GBP USD to have a further continuation move back towards the upside, right? So basically something like this, closure above, wait for that actual retest for a further potential continuation move back towards the upside. All right, at least let's see over here. See over here, right there, we also do have a beautiful point of interest, right? If you can see that change in market stuff, basically something like that, right? For a nice little shift to the upside. You want to find yourself looking at gold.
Hey, Diego.
I'm so GBP at.
Hey, Diego, can you hear me?
Oh, hey, James. How's it? Hey, my time is depleted, you say. I'm good, thanks itself.
It's time for us to move on to our next guest for the day. But I want to thank you for coming on as always. I hope you enjoyed it, and I hope that the chat enjoyed it as well. But we are about to transition over to Chris Pulver for his segment on the show. So Diego, thank you one more time for coming on today, and we'll see you next week.
Thank you, James, and thank you to the chat. Hope you have a blessed day further onwards. Cheers.
All right, guys, after this really quick break, we're going to transition over to Chris Pulver, so don't go anywhere. We'll be right back right after this.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hey everybody, welcome back. Happy Tuesday. Thanks for being with us today. So we're still in a bit of a recovery mode from last week's sell-off. We had a 3+% sell-off on the SPX. We're pulling back. I'm curious if this is a week where we finish in between. So high to low, we pulled back about 50%, just shy of that 50% zone. Directionally, things have been pretty quiet, and volatility-wise, things have been pretty quiet. If we take a look at some IV rank on Netflix just dropped a ton to 15. IV rank on the SPX was in the 40s last week. Now it's 26. IV on the NDX was in the 40s and 50s. Now 24. IV on the IWM is now still 81, which is pretty impressive. The VIX, however, has dropped. Right. The VIX itself was up to 17 last week, peaked up around 17. Now it's pulled back to 14.63 as the market has turned into a bit of a fix or recovery. Now, I don't know this, but is this it? Is that little, SPX 3% sell off? Is that it? That's our dip. As we say, buy the dips and sell the rips. Is that it? Or is there more to come? I'm looking at this position as a potential high, low, lower high, lower low. If we break this trend line, there's a little bit more kind of velocity to the downside to retest this high or retest this April low. I don't necessarily want to see price test the April low because I think that looks a lot more toppy in the future. But if we just had a pullback to this March high, this would be resistance. This would offer up a really good level of support. And to that area, I'm looking at like a 7 to 10% correction or so in the SPX. That doesn't mean I'm bearish. Okay, I'm kind of positioning this as a broken wing butterfly for this Friday expiration. That's trading at like a 1 to 2 delta right now, which is probably going to be full profit. I'll show you that right here. So my SPX, let's go this position. There's my broken wing. I got in for $1.15 credit, and right now it's trading for about 5 cents. So it's still sitting at like a 0 to 1 delta. So the probability that this closes for full profit is very high. I'm not gonna, close this out for a 5-cent debit. I'm gonna keep the full $1.15 and let this go to expiration, because also this is a trap. If somehow this market decides to get a crazy rip and go up to 5,700, 5,750, that would offer me like an 8 or 9 to 1 profit. So my $1.15 versus my profit trap versus my risk. So here's my $1.15. That's my highest probability right now. That's about a 99% chance of profit, which I'll certainly take those odds. And then if somehow price decides to go higher, that would get me potentially up into that ramp zone where this is a 10x profit. So what would be a $1.15 credit would then turn into about $10 credit if we're in that trap by Friday. So I don't mind that trade. And I've got the same thing on the SPX NDX for this week and for next week. So let me go to the comments here. Let's catch up. And I did take a fresh sell trade. I just finished up one of my trading rooms. I took a fresh sell trade at 175 on the Swiss yen. I'll walk you through this one. I'm taking this trade very small. I'm still really skeptical of the yen crosses in general, but I took a sell trade at 175. I put in a pending sell at 177.50, and I've got a stop loss above. So 1, 2, stop loss above. And all I'm looking for is this. This intervention high could offer some near-term support, but if it doesn't and price continues to go lower, I think this market is just going to gravitate towards this outer trend line and test this intervention low. My take profits are on 168 to 167.50. So I'm going after favorable reward to risk on the setup. My trade size is very small. I'm risking about $50 on the downside, and I'm going after about $150 to the upside. It's small. Like I'm not messing around with these yen crosses. I don't trade the yens very big. I don't trade the yens hardly at all. This one has been one of my cleaner trades as far as the technicals go. So I added that in this morning during my Forex trading room, and I like the trade. So that's what I'm sticking with. We also have a nice running trade on the dollar CAD. We've been in this one for a while. We bought in on this first pullback and we bought in on this pocket. So the dollar CAD's running up nicely. I took some profit on one of these trades. So this one's already closed for a winner. And then this one, the stop loss is at plus 50 and trailing. And it's up about 170 pips right now. So I'm giving it a little bit of breathing room. I want to see if this dollar CAD will continue to go up, pause, maybe go up and retest this high or this high. Ideally, I'd like to get to like 139 or 140 before I take profit on the dollar CAD. But it's risk free and it's at 50 pips. So that's a pretty good trade as well. Are you bullish on DXY? Why are you bullish on pound? Okay, so am I bullish on DXY? Well, in the interim, we've had some support holding, right? So if you go back to any session with me and we talked about dollar index, I'm watching this kind of choppy structure. So bullish on the DXY would be short term. And sure, I mean, the dollar has basically found support at 104 to 103.90 and it's turning up. But individually, I mean, the dollar's been performing better than the Aussie, better than the New Zealand. The New Zealand dollar is still running, by the way. Sold it at 60.90. It's up about 150 pips right now. So we've had some good trades running on dollar pairs. So let me do a little summary. Let's go. So I had a Aussie dollar buy, and that was stopped out. We had a New Zealand dollar sell, and that's in profit. Dollar CAD buy, in profit. And then I'm in dollar Swiss buy, and that's a position. I'm just still building a position there. And dollar yen, no trade. So as far as the dollar crosses go, I was also stopped out with a very small area on the euro dollar, stopped out. So New Zealand dollar sell working out nicely. Dollar CAD sell working out nicely. You know, took some profit and still booking some additional profits with risk-free trading. Dollar Swiss is a big position trade for me that I like to take up to like 96 or 97, possibly parity. That's going to take maybe another 6 to 12 months to materialize and be full profit, but I'll keep adding to that one. Euro dollar was short and sweet. I think we got stopped out for like a minus 60. So Aussie dollar was tight, Euro dollar was tight, New Zealand dollar's running, dollar CAD's running, and yeah, the dollar essentially just, you know, we bounced off support. So I looked at each individual dollar pair. Pound dollar, I'm really not liking. I think it hit 130. It's turned off that 130 handle. I'm not doing anything in the pound dollar at this time. So we'll take a look at it. But, you know, here's my outlook again on the dollar. As long as we're holding this low, this dollar index is still potentially coming back to support resistance, right? Support at 104, resistance at 105.50. If you want to use my numbers, I've got 103.90 and 105.60. So I could see the dollar doing more of this. But at some point, this dollar is going to break and go somewhere else. And I don't know yet if the dollar cutting or the Fed cutting rates in September is going to yield a dollar or a stronger dollar. It would make sense fundamentally that it yields a weaker dollar because it's going to be one of the last central banks to start cutting rates. But the issue I've got to ask here is the Fed cutting rates where all these central banks have rallied from, you know, 0% interest rates to positive territory, they're quickly starting to show signs of cutting. Right? There could be a rate cut on the table for the ECB in September. There could be a rate cut on the table for the BOE. New Zealand has been dovish, and we've seen a weaker New Zealand dollar. We've seen a weaker Aussie as well. We've seen some risk off trading coming out of China. So the Aussie's been weak and the New Zealand's been weak. China flows have been bad. Copper's been down. Demand's been lower, right? Oil's been down. So, I mean, does the dollar remain like the best of worst currencies? Maybe, but I think also, and I said this yesterday in a couple of my rooms, where if we're going to see higher highs in the stock market, I've got some interesting stats where, you know, about 56% of the time the S&P is making highs. The highest point of the S&P in the year is December and January. So if we're going to make all-time highs again, okay, then I do wonder if the dollar is going to be some type of shifted fundamentally lower. If it's pushing lower, you know, 101 is a big level, 100 is a huge level, very important level on the dollar index or the DXY. But I'm not there yet. So I think right now, as you see your charts, as you look at your charts with your dollar crosses, this is what I see. We're pivoting off support. There's some room for this dollar to run, but I would say once we hit 105.50 or so, If you're long dollar, I would say that's a good spot to be trapping, protecting, moving stop losses, trailing stop losses. Make sure you're not getting any unnecessary exposure in case this thing turns back down. Because this, in truth, is actually pretty narrow trading. If this is all we're going to do, this is not a good spot to be like aggressively bullish on the dollar or even aggressively bearish on the dollar. Because you're looking at maybe 130, 150 points in a currency. I mean, if we have a crazy day with FOMC or crazy day with non-farm payroll, we could have 80 to 100 pips really easily in a day. So it doesn't really offer a lot of open space to trade. Okay,
Hey,
Frank,
Chris.
what up, man? How are you?
Pretty good. How are you?
Good.
What you
the latest
talking
and
about?
greatest? What you talking about? What you talking about, Willis? I'm talking about the dollar index. So I still think it's
Pretty
choppy. I
boring
think
to me.
we bounced. It is pretty boring. I mean, we bounced off 103.90, 104 support. I think traders that are in the Forex land and they're looking for short-term opportunities. To me, the dollar looks a little bit better to the upside as of right now. But if we come into 105.50 or so, I wouldn't think that the dollar is going much higher than that. I'm still
Yeah.
looking at some fundamental flows where if we get a weaker dollar or a stronger dollar, we just have to see something with a little bit more clarity. And to me, I don't have it. I don't have it yet.
We could be talking about Tesla today.
We could be talking about Tesla today. I took trades on Tesla. Maybe it was in my trading room after we wrapped our session up. But I am in Tesla, similar to what I did with Netflix, and I'm also in Google. So let me show you here, Tesla. So I have a couple of things running here. So Tesla, I'm doing the in the money bear call spread, the 230 by 232.50. And I'm doing an in the money bull put spread, the 270.250 by 270. The expected move on Tesla for next Friday, they're looking for about a $27 move. If I price it in, I think I have it on my chart. Let me just go ahead and show this. So the IV's at 73. I think I should have it on this chart right here. So I'm expecting about a $26 move. I was conservative. I think the mean was like 12 and change. I looked at 10 and a half. And so I priced in my move by about $25 or so from 250. So we're roughly at 250 right now. I priced in a 272 on the put side, like the upper, in the money bull put spread. And then to the downside, I did a 230, which isn't that far away. So if Tesla has a reasonable move, 230 to the downside, 270, 250 to the upside. If it delivers and has some good volatility, then that's a credit spread that I collected 355 on. My max risk is $1.45. So if it wins, great. I can see this 355 maybe quickly decay down. My max profit's about $1. So it's not a big trade. I'm not going like hog wild on earnings this season. I don't know about you, but I'm like scaling back the here's why. Look at what Netflix did. Netflix didn't do jack squat. Okay, Netflix, and I'm glad I took credit spreads, man, because that $3,000 debit for a reverse iron condor would have been trading for nothing right now, pretty much. And also on Nvidia, this trade is sitting at 123, and after all this volatility and all this chaos in Nvidia, this thing is still centered right around my 126. So I personally, at this point, it's like, come on, dude, like, can Nvidia make a fresh low or try to retest the high? I need this to happen by next Friday. Probably doubtful. There's no real catalyst, man. Yep. So it's all of a sudden we're getting like this big IV contraction on some of these stocks, and maybe a pause through the summer isn't all that bad, considering the wild and crazy volatility that we had last week. But it is what it is. So I don't know what earnings season is going to bring, but we, as you said, do have some earnings to pay attention to. And so you typically throw out some ones that I don't see here in my notables. So I would like to do a spot check on these. Let's just take a quick peek at Monday's earnings here on the list. This morning we had Coca-Cola, Spotify, Freeport-McMoRan, which is FCX Copper, and then also before market was UPS and General Motors. So today after market, Google, Tesla will be the big ones. I'm trading those. I have those highlighted in yellow. There's some other ones that I'm watching. I tried to trade. Actually, I did take a trade on Chipotle yesterday. You may be interested. Chipotle was a $2,000 stock. Now it's $50. So I'm kind of happy with that. And so I put on a ratio spread I'm willing to own some Chipotle at like $33, $32. And I put that on yesterday. Ford, I'm watching to see if we get a pop back up to $15. American Airlines, I took some naked puts on out to 2025. And then watching to see what the kind of the sign of the consumer is, Royal Caribbean, Southwest Airlines. So anyway, let's talk some options, some earnings. If you want to, what do you have for me today? You want to look at Tesla? Are you in Tesla?
I am in Tesla. I own Tesla,
You
but
own Tesla. All right. So what are you doing?
I'm just holding it.
Okay.
When it came down, I bought a little more, and then it came lower and lower, and then I got a little nervous. But now it's back up here, so I'm feeling okay. I'm not trading it, if that's what you're asking. I just
You're not trading what,
I like
Google
owning Tesla.
or Tesla?
But yeah, I just pulled up Google because you said they had earnings.
They do. Yep.
So that's today after the bell.
Correct.
Last time they blew it out of the water. They had a crazy jump on the last earnings. It was like
They did right there. Yeah, that was pretty wild. So this was, I don't know if it was the day before earnings here and then the day after earnings, but yeah, this would have been 155 to 175. That's a big move. I'm only expecting to see a move of about $11.73. So that was a $20 move. That was almost a double expected move, or like a 2 standard deviation move, which is, it happens, but it's rare. So we'll find out. And this is all-time highs, by the way. So it's like, are earnings good enough to get back to all-time highs, or are they, I don't know. It's like, is it a miss, or is it about coming into expectations? That's one
I
thing.
mean, that was the same question last month or last quarter. So we had 161 as the all-time high. We were at 157 or 158 at close. And then we breached all-time highs by like 20 points.
Yeah.
So I mean, the same kind of move could happen again, but
True.
are we necessarily going to see that same reaction? Because what Google had last quarter, if you take a look at their earnings on TradingView, their table was it was actually substantially lower than the previous quarter, and it beat it by a lot. Had great guidance, and then this quarter's kind of around the same. So they're gonna kind of have to do something along the lines of I would say earnings is gonna have to be quite high. So not sure if
I
they
could
can
see
do
that.
now.
I could see that. Yeah, it look, we might be setting some lofty moves. If I can see here, if I go to price to earnings, do I get a price to earnings of the S&P 500? I don't know if they'll give me this S&P earnings by year, by month, by year, yield by year, growth by year, rate by year. Let me see what this shows. Nope, that's not what I wanted. I can find this. I can probably pull this from my friend Charlie Balello. Let's go S&P price to earnings forward ratio. See if this gives me a number for right now. All right, so we got Y charts in here. This thing might be locked, but let's find out. I'm showing the PE at 22.13. It was pretty lofty going into, we got up to like 28.61, and right now I'm seeing it. Oh wait, never mind. Hang on. This is like forward thinking. Okay, so right here, Q2 of 2024, we're sitting right here near this top. So 28.53, 28.61, that is relatively high. If we go back 5 years, okay, so Q1 2024, Q2 2024, right about the same levels. Look at this going forward. So
they're
Q3,
expecting
they're
price
expecting
drops then.
they're expecting like a slowdown. And so, again, I don't know what ultimately happens, but I think for these valuations, these are pretty close to some of the highs that we have seen during turnaround points, like frothy in 2020 before COVID, the COVID crash, right? I mean, I keep saying that it's like COVID was like the bow tie that was thrown on top of the market that was already ready to sell off. That's my opinion because I was already bearish before I even knew that COVID was going to be a thing to tank the markets the way that it did. But 2007, 2008, same thing. Frothy valuations. 2000, 1999, 2000, before the dot-com bubble. So I think expectations are high. I think that forward guidance has been pretty optimistic, but this is what's going to be interesting. Slowdown wise, you have to wonder if the U.S. is led so much by tech. If the U.S. is led by tech, there's going to be more layoffs, man. In my opinion, it's like for tech to continue to run and have more money and better margins, it's going to be less people working.
Yeah,
I think.
I agree.
So and that truly is like your AI trade. So everyone thinks that, oh man, AI is the greatest thing ever. Well, it could be because it's helping corporations make better money because it's more productivity. But the bad thing is people are going to be displaced and losing their jobs or be forced to go into business for themselves and do startups.
But on
And
the other hand, I think that AI is not quite automation yet. So there's
right.
going to be a lot of maintenance and a lot of work that needs to be done on these things. So I think in the future, though, it will create a lot more jobs on that side. But um, yeah, tech has been laying off recently. So I guess you're right. Like that trend can continue,
Yeah.
but
Yeah, I think
we're still
I mean
not there for automation.
and also, I mean, we'll have we should have non-farm next Friday, correct? So Friday's the 2nd. Let me check the calendar here. We should have non-farm Forex Factory. We should have non-farm on
The
Friday the
next,
2nd. Should be next Friday. If it's
yeah,
not, then it'll be the 9th, but it should be next week Friday as we come into a new month. Yep. So Friday, August 2nd, we have non-farm. There's no forecast right now. I was just looking to see what our jobs numbers were forecasting. So we've seen, again, steady numbers. We haven't had a lot of misses. It's been pretty steady in like the 200 to 200 plus thousand. Unemployment claims have been steady. Unemployment rate has been going up. So let me see what that previous one was. So unemployment rate, the last print was 4.1. We've gone, and this is one thing that's kind of interesting. We've gone from, I think, the low at 3.4 to an uptick of 4.1. Another potential like recessionary sign is 3.4 to 4.1 is 0.7%. That's within or just over a 12-month window. I mean that's a pretty big chunk in unemployment. Almost adding 1% unemployment in the last year and a half. I don't think it's by accident. I mean, there are definitely layoffs happening. There are slowdowns out there, but it's not all sectors. I think that's the one thing that has kind of thwarted the bears so far for the last couple of years is we don't have a halting recession. So some sectors are doing okay, some sectors are struggling, some sectors are outperforming, some are underperforming. And here we are, 2, 3, 4 years post COVID and crash, and the market's at all-time highs. And sometimes it feels good, sometimes it doesn't. But point is, I mean, the economy has been able to kind of elasticity wise, like take on some of this higher unemployment, and this has been like right into the Fed's trap, which is cool. The labor market's loosening, demand is going down, inflation's been trending lower, and here we are talking about this potential rate cut in September. So I'm very curious. Kind of first thing before we get into July would be what's the Fed going to say? Okay, not do, but what they're going to say at the end of this month, because Wednesday the 31st is a Fed rate decision. Likely that's going to be hopefully some language that we can digest and unpack for something to trade. Because after FOMC, yes, we have non-farm on that Friday, and then we wait for Jackson Hole, and then it's all about the Fed in September, and then there's going to be election drama, I suppose, for November.
if I'm
But
being honest, I don't think much is going to manipulate these markets more than what Powell says. And if he continues to say nothing, then you know how we said it's just going to be more of the same.
yep,
So I think PMI this week, NFP next week, I'm not really sure it's going to do much.
yeah,
Going into August, yeah, we're going to hear more of what Powell says. We still have those 3 forecasted cuts, right? Starting in September.
yes, yes. There's supposed to be, so September would be the first cut, and November would be. Let me go November here. So there's still a 55% chance that we're going to have a cut in November. So September, yes, by a huge margin, so 93.6%. And then November, possibly. December, possibly. So are
Yeah.
we cut,
So,
or is it cut, pause, cut? I don't know. I think
so I
that
mean, he's gonna have to talk on that a little bit.
I think so too. I mean, but does he though? Does he ever? Does he ever explicitly say like the market expects 3 cuts and we're only gonna? He'll never be
He said
explicit.
it at the beginning of this year, or maybe it was in December, where he said we expect 3 rate cuts this year, and then that's when the market priced in as early as March.
Yeah.
He said they anticipated a cut. Um, So he could say it again. I think that's what we need to look for
Hmm.
when we watch it. Otherwise, it's really going to be nothing else. He's going to say the economy is strong,
Yeah.
the labor market is steady, stuff like that.
Yep.
Inflation is not where we want to be.
Yep.
Uh,
It's not
in our
not
long-term
near
goal.
target, but it's trending lower. Things are improving. Like it's like a little bit, but never enough. You know.
So if he talks about rate cuts, I think that's the only thing. Otherwise, uh, probably just going to be the same sort of behavior we've seen this summer.
Okay, so let me ask you this. So we have Google, we have Tesla this week. Two big ones. Um, I will say that look, Netflix has already been a bit of a dud for volatility. It's been great if you're like I mean, it was funny. I was watching Tasty Trade or Tasty Live yesterday. They were talking about Netflix owes them so much because they've been burned on these like big like standard deviation moves that Netflix has had recently. And so they like to go out past the expected move and sell, sell, sell. Well, this time they killed it. Like they took a great trade and it sucked out all the premium. They made a ton of money, but they've been burned on like the extra volatility that's happened to the highs and lows. So I'm at this point where it's like if I'm taking trades on these stocks, I could see this earnings season being lackluster. And maybe it's time, seasonality wise, it's July, so maybe there's not a ton of volatility. But look, I'm staring at the chart here for the SPX because you know this week's trading, although rare, okay, last week, by the way, hitting this high and taking out the low, that only happens about 12% of the time. So that was a pretty wild week last week. But also, what's rare is this low and this high. So last week's low and last week's high, if we stay inside of that this week. Now, Tesla, Google, some of the other stocks that are out there, are they big enough to get this market to move, maybe half of 1%? Sure, all by themselves, they could. Google's top 5 company, market cap wise, it's large between GOOG and GOOGL. That's like four is that 4 trillion? Am I nuts here? Hang on. Yeah, we're at 2.26 trillion on GOOGL, and GOOG is 2.26 as well. So yeah, we're talking about $4.5 trillion in Google. If there's a big slip or miss, then Google has enough, market cap to move the market by maybe a quarter to 0.5%. But something, I don't know, man. Something tells me this is going to be like a sleeper earnings where markets kind of priced in a lot of high expectations. If they meet it, it'll stabilize it. If they don't meet it, you got to wonder if there's going to be an overreaction. I would say the overreaction would be if we miss earnings, sure. Overreaction, market kind of panics to the downside. Things that are falling apart in the background. China's slowing down, global demand is down, copper's getting smoked, oil's down, gold's pulling back off the highs. I mean, there are some interesting developments happening that are non-US and non-US tech. But
I think earnings is going to affect other areas. Big tech is not going to be one of them, unless so if expectations are not met or if there's something slightly wrong, I think
uh,
that's going to be. I think there's more things that can go wrong for tech this time around. Um, but I would say that if they all meet expectations, if they have good guidance or whatever, I don't necessarily think that's going to cause a tremendous amount of volatility to the upside. But I do think because the expectations were set that a a miss of any kind could be a little bearish for tech stocks. We could see a good pullback, but other than that, what do we have financials last week, right?
yeah, we had financials last week, and let
Not
me. Check.
Not too much happened from what I saw.
Yeah, it was pretty quiet. So I'm looking at let's go. So IWM, by the way, looking at the dashboard here, Russell's up 0.65, Dow's flat, Qs are down slightly. Okay, you've got NQ down slightly in red, Qs are down 0.2%, S&P at 0, E-mini futures at 0.14. Let's check this. So I mean, Russell off of this week's start is up around 3%. Not too bad. That's off to a pretty good start again. I'm positioned for a 218 by 217. I took some profit on my 185 by 225 calls last week. I have a lot of ratio spreads and puts on this one. So I mean net. I mean Russell's doing pretty solid if I look at the overall portfolio here for IWM. Where is my?
I think small cap earnings could be pretty market moving. This is the catch up trade that they're talking about.
Yeah, I agree, and I would love it. Where is my? I don't know. This is displaying a little bit differently. I was trying to show like where my actual like P&L is. This is showing unrealized. That can't be everybody. Oh, there we go. P&L. So I'm up about 16 grand year to date. So I took about half the profit. I was up like $8,000 or $9,000 last week on just those little bumps to the upside. I took a portion of that profit. So I'm probably just gonna kind of conservatively scale in, where I don't want to be like ridiculously aggressive on the Russell, but I don't mind the little like credit spread plays. I was looking at this. I mean, I did a 218 by 217. I collected 47 cents on that credit spread, and I'm in for like 10 contracts. So if we stay above 218 this week, awesome. Right, maybe I went out a little bit farther, but let me see what the expiration is. Either way, I mean, I'm looking at this as if we're going to 240. I'd like to just be like long and just kill it on options, like call options. But I also could just do a bunch of credit spreads and have this thing go higher, and stagger out some credit spreads. In fact, I think I'm going to do this, Frank. I'm going to go out. Let me take a look at my IWM really quickly. So IWM, I'll check one account and then I might just stagger this into everybody. So IWM, I have a 218 by 217 to August 2nd, which is next Friday. So I'm giving it some time. And then out to December, I've got ratio spreads. I've got my, long call. I've got the 240 and 270, as well as the 245 and 270. So that's probably my best trade moving out there as far as like high reward to risk is in the money. It's a bull call spread. And so I did the 240 I bought and I sold the 270. So I'm giving myself $30 a profit. And then on the other one, I'm doing a 245 by 270. That's $25 a profit. And I paid for this combination. I paid $7.50. So
but
if
it
I
would have
walk
to
away,
go up. It would have to surpass 240 by August 2nd.
they don't have to. No, if this happens by February of next year. So if we have a run, into the end of the year, these will be showing some really, really good profit. I can take, like this is a max of, this would be a profit of 2250. This would be a profit of around 1750. Is that right? Yeah. So between 2250 and 1750 on a couple of contracts. I mean, that's what, 2 contracts there, 2 contracts. So that's $3,000. That's $4,000. So I make like $7,000 per account, 8 accounts. I mean, that's $50,000 on the IWM. That'd be a good trade. That's max profit.
On IWM too.
You have what?
Yesterday I have a bull call vertical.
Okay.
For the end of the week though, and
Gotcha.
it was a 217. Bought a 217, sold a 226, and it cost. Yeah.
Okay, so you bought a 217 call, and you sold a what?
226.
226 call. What it cost you?
248.
Okay, that's good.
So
man.
it'd have to be, I want to say like above 220, just so I can stay net.
Yeah.
even.
Yeah.
But obviously, I would like to see it close above 226 and collect full profit.
I
But
like it.
we'll see.
Okay. I'm going to do this on IWM. So I'm going to go out past September. I'm going to give the market a chance to kind of perform through October, November, December. And I'm going to look at just doing some really simple bull put spreads and just kind of stagger out some income to say, if this market's going to make all-time highs, okay, and by all-time highs, I mean this thing has to get to like 244, 245.
Bull put spreads would be above price.
No, I'm gonna do them down here. I'm gonna do staggered credit spreads where I'm gonna put all my strikes in around like 220, which is about current price. I'll put them in at 220, and if
So
we
you're
go up,
selling?
I'm gonna sell a put at 220. I'm gonna buy a put at 219. And all I'm saying
Okay.
is 220 is going to be my line in the sand. But by Q4, by the end of the year, by Q4, if we're above, if we're greater than 220 by the end of the year, then I make money on all of these. So I'm gonna check this out, and I'll probably just. And the reason why is like time works in my favor. I was long the IWM early in the year, and I was waiting. And so when I finally got that explosive move over the last 2 weeks, it was prudent of me to take some profit because I had been watching just the value of those call options just decay, and then finally that huge injection of direction certainly helped. So what I'm going to do is this. I want to get out to, so the September effect is very real. Typically we pause, we pull back. Jackson Hole is volatile. You know, I know we have election drama coming up and whatever it's going to be November 5th on Monday. There's going to be more, there's more stuff happening in the election, whether you think it or not. I mean, if Kamala Harris is front runner, okay, who's she pulling for VP? I don't know. Are there going to be debates before the election? Is it going to be? Who knows? I don't care. I'm just like happy it's not Biden. I think the guy should have dropped out a long time ago. I'm glad that he did. I think that was a smart decision to at least give the Democrats a chance. So whatever. Now maybe it's 45 and 55. Maybe it's 49 and 51. There's popular vote. There's electoral college. We still don't know what the heck's going to happen. So I'm not trading politics. I just want to see if the Russell's going to be up to be up 220. That's all I care about. So I'm going to go 87 days. I'm going to do this, Frank. I'm going to go 87, 115, and 150. I'm going to take these three right here. So 87, 115, and 150. And I'm going to do a 220 by 219 on each one. So if I can go October 18th, do a 220 by 219, I can get about 43 cents. I'm going to see if I get 45 cents for this. So let's go. If I did 5 contracts here, not a bad. I mean, I'd like to go a little bit bigger than this. I mean, the Russell and small cap should be a good looking trade. This might be one that if I take the trade and we do go up, let's say the Russell, plays catch up. I don't know. I think I just have to keep it kind of mechanical and keep it somewhat small. So $200 is fine. Let me see if I get 45 cents. So let me see if I can get.
I think you should go all in.
Yeah, I had a feeling you'd say that. All right, I'm gonna try to get 45 cents on this October 18th. So let's try this out here. I mean the deal on, so I mean my risk is $275. I can stomach that as a loss. If I'm right, I get 225. So if and I'm going to stagger these, so 225, another 225, 225. It'll be just shy of $1,000 in gains, which is a fraction of 1%. But it's a steady little income play if I'm right, and also if price goes higher, these pay out faster. And so what I might do is for capital efficiency's sake, I might take the profit sooner, and instead of realizing the full winner, maybe I can grab a 50% winner and just reallocate the capital. But anyway, I'm going to take this trade, see if I can get filled at
Would you
about.
trust a what's it called? You selling a call vertical? What's it called? A bear call vertical? If it's above price and you're selling it. Either way, if you're selling a call, what do you think about this? Selling a call at 228 on IWM, and
Okay.
then buying one at 229. For
So
this
you're going to call
Friday.
a top?
I don't think I will, but I was curious. I wanted to see what your opinion was because
Well,
this is
are you talking this Friday?
yeah.
All right, let me go back to that. So this Friday is going to be what, the 26th?
Mm-hmm.
Okay.
It's 14 cents right now. The problem is if it breaks that move, you can lose a lot.
Wait a
Or you
minute.
can
So
collect
you
13
would
cents in
you'd
premium.
sell the 220. You said sell the 228?
Yeah.
Okay,
And
you sell
buy
the
the
228,
229.
you buy the 229 for 10 cents and you're going to risk 90 cents? I don't know. Dude, I'd rather do like a Russell broken wing butterfly. If you want to do something like that, I'd rather do this trade. If you can trade the RUT, go out to the 26th, and let's look at the RUT for a price standpoint and look at the same type of scenario, but give it a chance. Where here's a potentially good play, right? If I said, okay, 2300 here, and that's my, what's your line in the sand, Frank? If you look at this chart, what's your line in the sand at the RUT?
It was okay. 228, I'll say.
Well, so you're saying so you're saying 2280 on the RUT?
Uh I'm looking at IWM.
Okay, but I'm telling, so I'm going to do a broken wing butterfly, and the mechanics of that would be you'd make more money in credit on an RUT trade as opposed to a IWM trade.
Can you get assigned on RUT?
No,
Okay.
it's a cash secured index.
So RUT, Russell investment. What is this?
It should be the Russell 2000. This is similar to trading like the SPX NDX.
I'll pull it up on TradingView and find it
Okay.
later on
Okay.
Eagle. Okay, line in the sand on RUT. 2300 then.
Okay. So if you're saying that's your line in the sand, then let's sell the 2300. So we go out 3 days, 2300. So I'm going to do a butterfly spread. So this would be a call butterfly, and we'll move these up to 2300. So I'm sell the 23, and then I'll do a skip strike right there. So you could collect 55 cents. Okay. You could collect 55 to 60 cents on the trade, which means that if price does not get above, 2300, then you walk away with 50 cents credit. Buying power, I'm only showing a buying power of like $50. Okay. Now, the nice thing here is this is a broken wing butterfly, which means there's risk in the trade. But if you have price down here and you're collecting the 55 cents, you're giving yourself a bull trap as well. And you can collect the 55 cents. Okay. Which right now is about this is about an 82% chance of profit. 82% chance of profit to collect that 55 cents. You're also giving yourself the ramp up that pays about, it looks like about 8 to 1. So if you get in the trap, which price is up to 2300 by the end of the week, then you've successfully trapped that, Frank, and you turn 55 cents into $4 to $5 of credit. So
Yeah.
I think that's a better trade than 10 cents on the dollar for IWM spread. That's my thoughts. And so if you have a margin account, let me go into a margin account here and see what that would roughly be for a cost basis. I'm showing a credit and buying power reduction of around $50. So like it's not a huge risk. Let me see. Actually, this might be portfolio margin. Let me check on this. Let's check this account. Hang on. So this account here. Okay, so you're gonna tie up about $450 in buying power. Not bad. Like that. I mean, I take a ton of trades where under $1,000, easy peasy. So that's my capital requirement. But the trade, collect 60 cents, 50 cents. That's the higher probability move. And if you wanted to, you could shift this down a little bit. So I could go to 2305, make this a 84% chance of profit. Make this now an 85% chance of profit. Still collect 50 cents in the trade. So here's my mechanics here. This is just talking out loud. I would do the 2310, give myself about an 85, 86% chance of profit. Right now, this shows a 90% chance of profit from the Tasty platform. And my trap would be if price tests 2300, fine, but it's still below my levels, and this would be my broken wing. So I can collect, down here is not the credits that I want, but if you can grab 50 cents on that trade, this is about a 10-to-1 payoff if you trap it, and then your risk is, you're risking about $4.50. So there's risk in the trade, and I don't know if that's too much, but I think that's the way that I would trade the Russell if you're trying to call the top.
Okay.
So
Yeah.
that's my way of constructing the trade, just because you give it a chance to move, right? So you want to grab your 50 cents, and that's the trade you go after with the highest probability.
And if
But
it
if
hits your
price
line in the sand, you collect a lot.
Exactly. If it hits that line in the sand, which is outside the expected move, and if it gets to that level, you actually have the chance to have that be like the lottery play where you throw in like a 8-to-1, 9-to-1, 10-to-1 by expiration. So
Okay.
that rarely happens, but when it does, man, you're so glad you took a trade like that because you gave yourself that bigger potential profit play.
Yeah.
So I like that one on
Cool.
the RUT.
Well, it's 11:04 now.
Okay, do we have to
We kind
bounce?
of
We got
went past.
we have another guess.
Yeah, Nick Phillips is coming on.
All right, cool,
Sorry,
man.
Nick, that we're making you wait. I didn't really realize we were going past.
It's all good.
Um,
So I'll tell you what I'm going to do. I'm going to do those IWM spreads. I'm going to go October, November, December, and my line in the sand will be as long as the IWM is above 220 by the end of the year, I'll take those stabs, generate some income. My other plays, if the Russell's up to all-time highs, my 240 and 245 bull call spreads will be really, really profitable. So I'm going to keep an eye on it. I do think that watching earnings today will be important. After market, it's Tesla and it's Google. We'll come back tomorrow and talk about it. What happens? What do we unpack from this? Is it blowing out volatility, or is it doing next to nothing? Something tells me this market is complacent enough where it's like a little IV contraction. The VIX has slowed down a little bit from last week's excitement. And I just think this is an interesting variety of stocks this week where, yes, you've got some big ones here with the Mag 7 top 10, whatever you want to call it. But then you've got some, like Chipotle, Ford, airlines, cruise lines, railroads, defensives. It's an interesting little mix for today's
Yeah.
or this week's earnings. So I think it's a good sample because it's kind of a broad market sample for this week's earnings, and we'll see where the market can go overall. But all right, dude, I'll wrap it up. And Nick Phillips, enjoy the session.
Yep.
All right, thanks,
Sounds
Frank.
good. Thanks.
Yeah, dude.
I'll talk to you sometime later this week. We'll
All
look
right,
at
sounds
more
good.
earnings plays.
Cool. Bye.
See ya.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Hello. Welcome, everybody. Good morning. Happy Tuesday. All right. Jumping in this morning, let's do our typical look at the dollar. My Doxy bias has shifted a bit from the last time that we talked, and that is mainly due to the I've shifted from being incredibly dovish to being data dependent, very similar to how most of the central banks are right now. And the reason being the discrepancies between softening economic data. Pause. If we had softening economic data by itself today, July 23rd, and nothing else was going on, my dovish bias on the dollar would still be 100% intact. However, we also have the Trump trade coming into play where the markets are starting, arguably pricing in a Trump victory, and a Trump victory meaning a stronger doxy due to the inflationary nature of some of his economic policies that he has, claimed he wants to do. So I'm data dependent on the dollar. Leaning, it's tough. It's tough because I want to lean dovish so bad, but I also think that the markets are taking in stride a bit the potential for a Trump victory in November. Politics, political opinions aside, I don't feel comfortable betting against the Trump trade at this point in the game unless we get continued pieces of economic data that we could take advantage of in that moment. So what do I mean by that? Let's say, for instance, we'll play pretend that the Doxy hangs out in this area until tomorrow, right? Whether that it pops up above this resistance level I have marked up here or stays underneath of it or hangs out right at it. Doesn't matter. As long as it stays in this area and doesn't go parabolic before tomorrow morning. But let's just pretend that it's going to hang out here. And then tomorrow we get PMI information out of the US that shows a weakening dollar, gives us a dovish bias for policy. In that case, I will be grabbing very quickly sell side scalps. Just getting involved on, as soon as the data is printed, we see the market reacting to it. Boom, I'm in, and I'm most likely out very, very quickly. I won't be wanting to hold. This will be something where I will drop down to the 15 or the 5 second to get involved, and I won't be holding it much farther than like a 1 to 1. Again, depending on where price is at and sort of where we're aiming for. If we can hang out anywhere in here going into the data, and then the data drops and I can catch it somewhere in here, I'll hold it to this level, to this support level. Minimum, I'll take partials off at 1 to 1 and then hold it down into this little support level here. Mainly because a PMI print, as much as it's going to be a tradable opportunity for us, it's not something that I'd be willing to hold for the rest of the day tomorrow, seeing as how on Thursday we have GDP and unemployment data. And then on Friday, we have consumer spending information coming out. So now, with all that said, if we get significant weakening across the board, all US data this week, I think the markets will take that in stride a little bit more than the Trump trade, at least moving forward for enough time until we get some more solid data out of the election circuit here in the US. What do I mean by that? I mean, if we get significant weakening in this week's data, it will have been a significant weakening in all the data for July, for the most part. And we have a new potential Democratic presidential. She's all but, I think, confirmed her nomination, Vice President Harris. I'm interested to see how the popularity polls shift and sort of how this affects Trump's potentiality to be the president. I think after the assassination attempt and the botched job during the interview, or not the interview, the debate on Biden's part, the markets were pretty much pricing in a Trump victory. But now with Biden stepping aside and Harris stepping up, I don't know if sentiment is going to shift that much. I think it's going to shift. It's definitely going to be more favorable for Harris than it was for Biden, just because she can do more than string a couple sentences together. Again, I'm not trying to get political with this. This is an assumption I would make about, or a presumption I would make about any president on any side of the aisle. If you have a hard time with public speaking and you're the leader of the nation, it's a little, I think, difficult for people to want to rally behind you. And so Harris has that leg up on Biden where she can get up in front of a crowd and present at least better than he can. Whether or not she stands a chance against Trump, I don't know. Um, Especially after an assassination attempt that he survived and sort of rallied uh, after. It's difficult to say whether or not her victory is going to be pricing into the market at all. All that aside, again, the weakening data out of the US this week, I think, will solidify some more dovishness, at least for a couple weeks until election cycle news starts to funnel back in. And if, let's just say, for instance, we get significant weakening this week out of US data, I could see dollar weakness playing out for at least a week. And then we get more economic, or not, sorry, economic, we get more election. Exactly. Anything can happen in the election. We get, maybe a resurgence of popularity for Trump versus Harris. Then my dovish bias for the doxy is gonna be challenged. Simply because of the inflationary nature of Trump's proposed economic policies. I would love nothing more than to sell the dollar. It's I'm an American, but I'm hoping for a weakening economy so that interest rates can come down and I can buy another house. That is my big goal. But anyways, all of that aside, yes, anything can happen during an election. This is an interesting time for me personally as a trader because I have never traded through an election with a fundamental bias before. The last election, I was trading, but only trading technicals. I was paying zero attention to the fundamentals of the market, and so I have never had to navigate this before. It's very interesting. It's very cool. Uh, I am reading everything I can get my hands on from J.P. Morgan Chase, Goldman Sachs, all the big guys. They put out research documents like daily, and I'm just trying to scour through those to see kind of what the market is thinking, what the big banks are thinking, what the big wigs are at least saying they're thinking. Um, and it seems to be, at least from JP Morgan Chase, a few of the analysts there share my sentiment of the data dependency. It's a tough call right now because you have conflicting information out of the market. Trump trade versus softening data. Which one is the market going to be pricing in uh, with more conviction than the other? And so, that's why my current bias on the dollars is data dependent, which is good for the way that I trade for the most part. It means that I can be open to taking the doxy either way when it comes to economic data hitting the market. If PMIs come out with softer data, I can grab a quick softer. I can grab a quick doxy sell or a dollar sell off of one of the pairs. If it comes out stronger, I have no problem buying the dollar up because I have fundamental biases that could support both sides. So I don't love doing that. Often I like to have um, a preferred direction for data, but I'm okay with this week trading the data either way it goes, real quick scalps and not taking anything longer term. All right, so Doxy is up. Doxy is showing strength still. We have not rejected this area of price action too heavily and continued down yet. So with Doxy up, we would expect some gold downside, and that's exactly what we have. We have this gold downside kind of hanging out here at this area of support, similar to Doxy hanging out here in these areas of resistance. Um, Now, whether or not this is going to continue down is anybody's guess. I think if we're going to pop back to the upside, this, like I was saying last week, this is going to be the area to start trying to buy it up from. We have not the area, this is an area to start buying it up from. It's I would say better to start trying to buy it from down here as opposed to up in this area, simply because we have this area of support here. We have this area of support. Price tried to push down, got rejected. Tried to push down, has since rejected. Tried to push down, has since rejected. So price has tried multiple times to push down significantly farther below these levels and has not been able to. And now, as far as chart patterns go, we have a couple things happening for us. We have a head and shoulders pattern potentially forming here. We have a double bottom with a neckline break, retest, potential push to the upside from here. This would be, if you're looking for like probably a swing trade, I would say at least a couple days worth of price action here. It's tough because you're trading ahead of data. I know some people, that swing, of course, that's what they want to do. They want to get pre-positioned ahead of the data. And if we get significant softening out of US data, you would theoretically be wanting to see gold go up. So if I was looking to get into a swing trade, this would be the area that I would be looking to get in at. And I would be setting my stops outside of this structure. Again, none of this is investment advice. It's just simply me musing about potential swing trade that I would take if I was looking to take swing trades on gold, which I'm not. Gold, again, if we get softening US economic data, which is honestly my preferred economic data type this week, then I'll be, you could be scalping gold. So what do I mean by this? I mean, if PMI comes out, lower than expected, it's going to be gold upside, dollar downside, uh, potentially equity upside. What do I think about gold? I'm going over gold right now. So this is gold futures. It's the exact same thing as XAU USD. It's the exact same chart. So my idea here is we're at a level of support. Now, you do want to be a little careful because on the opposite side of this, market structure wise, we have broken this support. And we do have a strong dollar, strong-ish dollar. So you could see shoulder, head, shoulder fall off. That potentiality is there. Again, for me, that's not the ideal scenario. I think continued gold upside is my ideal scenario here. Coming out of this area, stops below this head here. All right, talk about Euro JPY. Pound USD. Okay, I'll touch on Pound USD before Euro JPY, simply because I don't trade Euro JPY. I do trade Pound USD, and I'll look at it actually on the futures chart. Again, Pound USD on the 1 hour. This is the Pound futures chart. It is just simply a different contract. It's the exact same pricing. Okay, so pound. Now, I have been wanting to short the pound for a couple weeks now, pretty much the entire month of July. And I think we are potentially starting to see some of that pound weakness come into play. The issue here is for a significant move to the downside, we're going to also need to see dollar strength, which is not my ideal. Daily level of resistance right here. Okay. So, again, with the U.S. economic data coming out this week, sort of anticipating some softening in the data. I don't like to anticipate data. I like to react to data. I want to let the data hit and then get involved in the market. But as far as pre-positioning goes, if I was to get involved ahead of the data, and my idea, my bias is weakening US data, then I'm going to be looking for pound upside. And it's tough because you don't necessarily, I wouldn't necessarily call this a strong support. It's an area where price sort of, based out and then rallied from. I like this support more because it is a stronger attempt for the bears to come in psychologically. If you're looking at price action from a psychology standpoint, this is a point of pretty strong resistance here. Resisted, comes in, resisted again. A lot of selling happening in this area. A lot of price action with more volatility, more movement than this area. So I tend to view this area as a bit more impactful than I would say this area is. So I don't want to get involved on a buy from this area ahead of US data tomorrow. And we have pound data tomorrow. We have pound PMIs coming out about 4 hours ahead of US PMIs. But regardless, this is how I would trade the pound at this point in the game. One, I'm not going to get involved in anything just yet. I'm going to wait for PMI information tomorrow. Now, the ideal scenario would be to get strengthening pound PMI in the morning. We go ahead and we jump in on buys. Let's say the data drops right here and pops, and we see the pound pop to the upside. Boom, get in as soon as we can and let it ride. Maybe take some profits off the table as it's going up. As we near the US PMIs, you have a choice to make. Anybody who would trade it like this would have a choice to make. One, you take everything off the table and wait for the US PMIs to drop and then get in on a scalp if PMIs come out the way we want them to. If US PMIs come out weak and pound PMIs come out strong at 4:30 in the morning, my time, and then USD PMIs come out weak, we would see a continuation, should see a continuation of pound upside from the US point. So that choice that you have to make is whether or not you're going to secure all your profits ahead of the US PMIs and wait for the PMIs to jump back in, or if you're going to be in from the pound PMIs, take a little bit of profit off the table, maybe protect your downside with a stop loss at break even, and then let the US PMIs hit and potentially be pre-positioned in the market for a weaker US PMI move and a continuation of that move. So you're talking about an entry from here, partials taken, the same entry holding, US economic data comes in weaker, and you continue that move. Or pound, strong PMIs, you get involved, take all your profits off the table, wait for the USD PMIs to come out, which price could be up here at this point. They come out weaker, and then you get involved again and take another little trade from here. So personal preference on that, but that's the way I'm going to be approaching it. And it's going to be the vice versa scenario as well. If we get weakening pound PMIs, now with this, I personally, if we get weak pound PMIs, I would take all profits after the pound PMIs, which is how I'm going to be trading it. If we get weaker pound PMIs, I'm going to be taking all my profits after my scalp, going into the USD PMIs. If we happen to get stronger USD PMIs, well, then I'll again sell off the pound from that point. But I'm not going to want to hold it into the USD PMIs because I have a presumption about the USD PMIs that we're actually going to see weaker data tomorrow. So with that bias baked in, I don't want to be holding anything against potential US weakness tomorrow. So that's pound. Let's go to Euro JPY. believe there's some yen strength coming in. Pretty significant yen strength coming in here. This leg is recovered in the last, 2 weeks? About 14 days, we've recovered almost all of June's price action. We're trading back where we were in May and part of April. So the yen has had some significant upside move here. I don't think this leg is to be discounted lightly. So with that yen strength, also, do we have a strong euro? We also have a strong euro. A little weaker this week. So euro pound or euro yen, looking at it on a technical basis and pulling from my Rolodex here what I can remember of the most recent euro yen fundamentals. Personally, I wouldn't be trading euro yen right now. This is for who asked? FX Wolf. Euro yen. I personally, I wouldn't be trading it, and my reason for that is you have a significantly, let's say from July 10th, we'll point it from the very bottom here, July 11th, on the yen. We have a lot of strength that's come in the last 2 weeks since July 11th. Well, let's go pinpoint July 11th here. July 11th, euro has also been strong. I don't want to trade one strong currency against another strong currency. It's not my ideal edge. So what would my ideal edge be? If you're going to be looking for a yen trade, I would be looking for the yen against something weak, significantly weaker than the yen. Now, would I be getting involved here? Not necessarily, because of where price is currently at, but you want to look at something like NZD or AUD yen. These are significantly weaker. Let's go again, compare it from the same time point, July 11th. We saw Australian dollar fall out of the sky. July 11th, New Zealand dollar falls out of the sky. July 11th, CAD falls out of the sky. So you have multiple other options to pair against the yen, but so instead of pairing a strong currency like the euro, strong-ish currency against the yen, you could be pairing something else against it like the Australian dollar and having a much easier trade, I would suspect here. Let's go see. Let's go look on a 30-minute time frame. Euro yen to the downside. Let's maybe compare that to the Australian yen. And we will $30 minutes. Refresh. So this is interesting. I wonder what this piece of data was. Thursday, July 11th at 8:30. This was a piece of economic data. I just don't know what it was off the top of my head. Maybe CPI. I think maybe US CPI. But you can see a significant difference in the range here. Let's just take it from this pullback. So 420 pips on Euro JPY. 462 pips on all JPY. So not as significant of a difference as I thought. They seem to both be moving similar. It just, if you're looking at this from a structure point of view, it almost seems as though the very similar amount of pips, but the Australian dollar, it seems to have been moving down much more significantly. for whatever reason, is this a trick of my eyes right now? Because it seems like, let's do this. Draw a little rectangle. You have a pretty big portion of price action that gets stuck in a range here from 9 on July 11th to July 17th. Whereas this does about the same thing. Let's do it again. July 17th. Just upon looking at it, it seems like odd is moving down with much more conviction as opposed to Euro JPY, which measured, as far as a measured move goes, they're very similar in price difference as far as the amount of pips is based on Forex movement, very similar amount of movements, but the Australian dollar just visibly has more conviction to the downside against the yen. Let's check New Zealand dollar is probably going to be very similar. Very similar. You can see just a lot more conviction with the downside move, and this may actually have more than 450-ish pips to the downside from this pullback. Nope, same thing. 430. Very interesting. Regardless, my conviction with trading something like NZD JPY or AUD JPY or even CAD JPY would be much higher than Euro JPY right now. Until we get some information out of Euro that changes that. As soon as we get some weakening opinions, weakening ideas out of the ECB, I think this will shift. Now, this calls into question UJ would be the most important trade here for me. If we can get that weakening US data, this would be a great trade actually to take to the downside. This downside trade, this UJ sell-off, I've been waiting for since February of this year, which was back in here. Kind of anticipated some sell-off from this previous high area, this previous all-time high. We were hanging out in this area. The market was anticipating like 5 rate cuts, 6 rate cuts this year. At the beginning of the year, in January, we were starting to pull up into this area. I was like, oh, can't wait for this area to get tapped into, because this is going to be the mother of all generational trades, as we get the yen rumored to be leaving negative rates, which they ended up doing, and the US dollar softening. Sweet. Well, the yen rumors, they proved to be true. The yen left negative rates, but the markets didn't care. The yen raised rates, left negative rates for the first time since 2016, I believe, and the yen still fell off like crazy following that. And then, of course, we had the quarter one sticky CPI inflation information coming out of the US, which pushed the dollar higher as rate cut bets were challenged. And we just had this massive move to the upside from UJ. But my patience has been holding out. I've been saying all year, I want to see dollar weakness. I think it's coming around the corner. We have had significant progress on inflation. I was data dependent in the sense that if the sticky inflation numbers had hung out all Q2, then my bias on the dollar would have significantly changed. Going into the rest of the year, I would be looking for a dollar strength. But because we got those numbers coming down, the labor market is seeing some softening. Economic data wise, it is a dollar. I'm a dollar bear all day long. Again, right now, data dependent, leaning bearish. GJ. Somebody asked for GJ. Let's check in on that. So basically all yen pairs, I mean, you're looking at downside yen, or sorry, you're looking at upside on the yen, so you're going to want to be looking at downside on all the yen pairs. But the problem with trading something like GJ to the downside is how strong the pound is currently. My bias for the pound is downside at some point. I think will start to kick in. But a good tradable opportunity out of GJ, it's going to possibly present itself tomorrow morning when we get PMIs out of the pound. If we get weak PMIs, if we get weak pound PMIs, a GJ sell-off, great tradable opportunity, in my opinion. I'm not going to trade that because I don't have access to GJ through my futures broker. But regardless, for those of you trading Forex, I would say a GJ sell-off in the case of weakening pound data would give you a slight edge on the rest of the market. And that's basically, yeah, that's my yen spiel. Do you guys have any questions for me? I will be back on Thursday. If you have anything ahead of that, feel free to jot it down and ask me then. Let's see. NASDAQ seemed to be breaking out of its yesterday's range to the upside. All right, guys, if you don't have any questions for me, I'm going to go ahead and sign off. I hope you all have a great rest of your trading day. We will be going live with my private group tomorrow to trade all of the PMIs. And on Thursday, when I'm back on the show, I will be updating everybody on how things went with the PMIs. We'll be trading the French and German PMIs tomorrow morning. We kind of ignore the Euro composite PMIs. And then we will be trading the USD PMIs when they come out. So tomorrow's going to be a long day for us. Let's see. So we'll be trading French and German, mostly just German. I like to see what the French PMIs do, but then I tend to just trade the German PMIs. And then we'll be trading pound PMIs and the USD PMIs. We'll also be kind of paying attention to the monetary policy situation out of the CAD. This is the way I'm going to approach this. If we get a good tradable opportunity out of the USD flash PMIs, I'm going to ignore the monetary policy meeting out of the CAD simply because I don't want my attentions to be too spread. But if PMIs come out either mixed or as expected, I'll shift focus and go look at the CAD interest rate decision and pay attention to the press conference there to try to see if we can get a tradable opportunity out of that. And then on Thursday, of course, we have unemployment data as well as GDP at 8:30 in the morning. And then I'll be back on at 11 and we'll be going over all of that and kind of how we handled that. So if you guys have any questions, feel free to hit me up on Instagram. And from all of us here at A1 Trading, have a good day.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.